Well, markets really just, I don't know, building up a little bit of steam. We were down 100 when the show started. But really, everyone's still waiting for more of these earnings to come out. We had some great earnings yesterday after the bell that have influenced this market, especially NASDAQ. So tonight, right after the close, Intel, Starbucks, Norfolk Southern, that's going to give us a great beat on the economy and a whole lot of other things. They're very critical. The question is, should investors be in them before these numbers are announced? Back with us now to discuss Lindsay Bell, Jonas Ferris, Scott Martin. Any of those names, Lindsay, you feel like, hey, this company's going to beat or will give us a better insight to what's going on?
Well, I think all of them are worth paying attention to, but I'm watching Intel for sure, especially given the numbers we got out of some of the semiconductor and semiconductor equipment companies last night. Intel, I think this is one that's been a little underrated. They serve the data center and PC market. Those have been really stable markets. They're not very exposed to the smartphone area, which has been the big problem within the semiconductor space. It's trading at 11.5 times, a big discount to the market. So I think there's some opportunity there, and I think it's just been underestimated because AMD is a big competitor. They think they're taking share, but I think it's going the other way to Intel.
And I got to tell you, we were just talking charts. If this stock gets above 50, that is a major, major breakout. You could see a huge move to the upside if that happens. Scott, which one matters the most to you? Which one, if you're an investor and you're looking for something to go long overnight?
I like Starbucks, Charles, for a couple reasons. One, Starbucks has held up really well in the market sell-off in November and December. Recently announced they're expanding their delivery service to other metro areas, which I think is a really big deal. And it's a consumer reflection, right? I mean, I think the consumer has managed to hang in there, as we've seen over the last, say, holiday shopping season. So Starbucks is one that we're looking at taking a position in as earnings come in tonight.
Jonas, what about you?
Okay, from a pure watching the economy, I like Starbucks for the domestic economy, but I don't like it. I think I think they made a lot of mistakes by letting the upscale market disappear in urban areas. All these cooler coffee bars are all over. They should have had a spin-off brand that was like their cool coffee bar, and they're getting chipped into the bottom by McCafes and everything. I don't think this is going to necessarily play out tonight, but this company has a not very good 5-year trend coming, I think, down the road. Now, as far as Intel, I agree with that because that is the best late-stage tech boom stock to be in, essentially, because they're not going to fall fast and early in a crisis if it is the end of the game here at tech, because they're getting all these servers being bought by all these venture capital-backed startups still. What
about Norfolk Southern? And, CSX reported last week, and I thought the CEO's comments were the best that I heard all year long. He said, listen, there's a lot of noise out there, but the business is booming, and none of their clients, none of their customers were changing anything. They didn't change their plans. They had great guidance. So for me, it's one of these names we don't think about, Rails, and that's certainly, they don't gee whiz, or they're 200-300-year-old companies. But and can we get a sense, maybe, Lindsay, tomorrow about the health of the domestic economy from Norfolk Southern?
Yeah, I definitely think so. Today, you also got earnings from Union Pacific, which were really good. Strong volume, strong pricing. They're getting better with production or productivity. So I think it's definitely an area to watch. You're seeing the industrial area growth. It's offsetting the declines you're seeing in agricultural and industrial. So I think Norfolk Southern is just going to be another one of those rail names that does well this quarter.
Scott, overall, are you surprised at how earnings have come in thus far? I mean, the earnings beats are ahead of expectations. Revenues, not so much.
Yeah, I guess it's kind of what expected, at least on our side. I mean, you're right. The earnings numbers are decent as far as the growth, but it hasn't been a ton of them yet. So we'll see how tech goes in the next couple weeks. But it's been largely good. I think the point Lindsay made earlier was really, really good, is what has come out so far that's been good, has been received very well by the market. And what hasn't come out not so good, or what has come out not so good, if I could say that right, has been received okay by the market. You go back a couple months ago, if these earnings would have come out in, say, November or December's market, and thankfully they didn't, they would have been smoked. So the market psychology has changed a little bit here, and that's beneficial if you long these three names that we talked about just now.
And that's interesting, too, Jonas, because we've talked about the psychology, particularly with our earnings estimates being guided so much lower. I mean, we've seen a 4.5% haircut from October 31st until now with respect to the first half of this year. I mean, there's just a direness or anxiety out there, and so they're not big hurdles for these companies to clear.
No, the optimism is definitely removed. Look, I think the market got too hot last year, and it got a little oversold when it crashed 20%. This is kind of the right level for where the global economy is right now. And all these companies that are mostly domestic, you're going to see solid numbers, basically. If they're doing stuff abroad, that's where you're going to see problems right now in forecasts and in pricing power, like with the airlines we just talked about. Domestic airline will do well. Norfolk Southern is domestic. They'll be okay. Anybody, if you see trouble at Starbucks, it's not going to be my long-term crash forecast tonight. It's going to be China or some other country.
Right.
So I think that'll support prices at this level in the market, given how low interest rates are right now.
Lindsay, where do we go from here? What are you thinking? I know we're still in the beginning, maybe 15%, 20% by the end of the week. Is that going to be enough for you to start really having a firm feeling for how we continue January and then to the first quarter?
Yeah, I mean, I want to see how the rest of these earnings come out. I mean, we're less than 20% through the earnings season. Next week, we're going to get a whole slew of numbers. I can't wait to hear from those tech stocks. The FANGs,
right.
The rest of the FANGs are going to be reporting for the most part. So, I mean, I think the Fed is the big question mark. Trade too, but the Fed is the biggest.
Well, we got a lot of hard deadlines coming up. Thank you all very much. Now, here's Liz Clayman.